Good morning, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here. The European Central Bank has now went full throttle into quantitative easing basically forever. No end in sight. Now, the central banks have been actually taking turns with quantitative easing. Whenever a country starts to get in trouble, that particular central bank, whether it's the European Central Bank or the Bank of Japan or the Chinese Central Bank, the People's Bank of China, or the U.S. Central Bank, which is the Federal Reserve. Doesn't matter which central bank. They each are now taking turns, doing this stimulus programs whenever countries start to get in trouble. So right now, China started new stimulus, and the European Central Bank has started new stimulus. But as this recession starts to spread and starts to grow, Germany's central bank, all of them are going to have to start stimulating at the same time as the recession grows in size and scope. They're trying to delay this recession actually taking place. And what they've actually done is they've created a system where they're going to drain liquidity from the middle class. It's going to suck liquidity out of the middle class, and it's going to actually destroy the middle class. You just can't do this. The reason why a vibrant, strong economy relies upon a large middle class, and that's what a vibrant economy relies upon. When you start draining the middle class away, and you have a rich and a poor class, two things happen in this situation. One of the things is the governments will tend to drift toward socialism to try to enrich the middle class through socialism. But that doesn't work. Just take a look at Venezuela. This is what the end result of that is. So now what other direction can they go is corporations at the same time will try to take control. We see all these things happening, and you're going to ask, well, how are corporations trying to take control? The king, in ancient times, always had the treasury. What the treasuries were in ancient times was, it was a big room that was well guarded, that was full of gold. That was a treasury. And this has carried down to our day. This is what they call it, the U.S. Treasury. Corporations will try to take control by taking that power that belongs to the king, which later belonged to the government. That power was transferred from the kings to the government. The government now controls the treasury. That power is the ultimate scepter of power. Corporations will try to take that control. And if corporations grab that control, we'll move toward, because that's the ultimate control. Whoever gets that control controls the world. Corporations will ultimately if they do get control, the world will turn into a corptocracy, which is something we haven't had before, but that's a subject for a different day. What they're doing right now is the central banks are actually taking confidence away from the fiat currencies by mass printing. Not really printing. Now they just push a button on a computer and they create currency units. Well, they've gone mad with this. They've gone crazy. And they're doing it in overabundance. And they can't move in any other direction. They're going to have to continue with this. Now that they're on this road, they're going to have to continue on this road because they can't turn around and go back. They're going to have to increase this exponentially. And what that basically means is we're going to exponentially move faster and faster toward a period in time where people lose confidence in the fiat currencies. This is no other way for this to go. And when that confidence is lost, it's going to be a sudden effect where word spreads very fast through the general population, not just through people who are ahead of the curve and already know about this, but there will come a point in time when all of a sudden the word spreads through the general population, hey, you know what? We can't trust the currency anymore. That's when you start to see the confidence lost in the fiat currencies and a movement toward another way out to escape this, to try to preserve their wealth. Suddenly, it's a sudden effect, they'll run into the only way out, which is, used to be, it was only gold and silver, but now we have cryptocurrencies too. And you could see a massive exodus, just like the gold rush times, when they used to all head out to the Klondike. Gold, the Klondike, hey! Oh, grab their shovel and get on their mule and head to the Klondike. Well, this is the same kind of rush, mad rush, into alternative assets to the dollar when confidence is suddenly lost in the purchasing power. And this can be an effect that happens very quickly once it happens. It can go along for years with nothing happening and people seemingly not getting it. Just, they don't get it. Seen these Mark Dice videos where he goes out and tries to give people a 10-ounce bar of silver and they don't even know what it is. But when this switches, everybody will know. Everybody's suddenly wanting the asset classes that are going up in value while they're watching their dollars disintegrate. It's the same effect that you have if you have a giant stadium, say a football stadium or something, and everybody's in there and there's only 2 exit doors. They're not paying any attention to the exit doors. They're in there having fun doing whatever they're doing, But if something happens, some panic situation, they all run for the exit doors at the same time. It's like a stampede mentality. Anyway, let's get into the markets. That's what's going to happen. Listen, guys, what I just told you is going to happen. And the reason why is because they're pushing it in this direction, and they're only going to push it so far before it flips. And it flips suddenly when it flips. Okay, let's get into the markets. Let's open up the charts right here, and let's take a look at the silver price today. Because this is the, really, silver is one of your best, the best ways out of the dollar. It's one of the best. And it's an asset class that is diminishing. The world supply of silver is diminishing. A report was done by the U.S. Geological Survey quite a few years ago, and they said that silver was going to become basically they said it was going to go extinct. Not really extinct, but we're consuming all of our silver. It's ending up in landfills, in old computers and stuff, and it costs like hundreds of dollars per ounce to recover it. And so they just bury it under the ground, But you know what? There's a day coming in the future where it'll pay them to actually go in and dig those old computers up and stuff and tear them apart and use solvents and chemicals to melt the silver off of the old circuit boards and stuff, and actually recover it, which probably costs like $900 an ounce to do, or anyway, it'd be probably over 400 or 500 an ounce, even if the workers were working cheap to try to recover that silver. There's a day coming when silver value is going to be so high that they will actually be recovering this silver. They'll be mining silver from landfills. That's how high the silver price is going to go in the future. And we're going to see a ratio that's going to drop to gold, the silver to gold ratio. That ratio is going to drop enormously from where it is right now. So where's the silver price today? It's at $18.04. And, this is a bargain probably. If we look back in the future 20 years from now, we will realize that this was the bargain that only come along once in a lifetime. That's what will happen 20 or 30 years from now, when mining production costs are going to go up drastically in the future. They're digging out all of the best ore grades out of the mines as fast as they can to try to keep up with the bar and coin demand, and also to keep up with the industry, which consumes a lot of silver. Amazing. Let's take a look at gold today. 1505. Right now it's going up. It's up $6.50. 1506.30 ask. Gold is an amazing stuff too. These are two actually amazing metals. You can't use anything else in certain types of electronics except gold and silver. And you know, this world is electronic dependent now. We are totally electronic dependent. They're not going to quit making cell phones. Each cell phone they make consumes a certain amount of silver. They're just going to pass the price on to the consumer when the silver price gets really high. So instead of your iPhone costing $1,000, they'll just pass the price on. You have to pay $1,400. Do you really believe that people are going to stop buying iPhones just because the price goes up from $1,000 to $1,400 when their old iPhone breaks? They're going to pay the extra $400, which is going to be the cost of the silver, increases in the cost of the silver that goes in it. That's what's going to happen. Let's take a look now at cryptocurrency market capitalizations. Now, cryptocurrency is in the doldrums right now. It's not really going anywhere. It's holding its value in around 200. I've been watching it anywhere from 262 to about $267 billion market cap, but today it's at 263.9, 70.3% Bitcoin dominance, and basically crypto's been going along sideways for a while now. It's getting ready to make a move. I am not really sure which direction it's going to go. I'm going to be honest with you guys. I'm not really sure right now which direction it's going to go. But there's kind of a floor now underneath cryptocurrency, you know, especially Bitcoin. There's kind of a floor underneath the price, and I don't really expect it to go under 8,000 right now. But I do have a price target by the end of this year, which is 16,000. Guess what, guys? I also have a price target for gold by the end of this year. I think it's going to be over 1,600 by the end of this year. And silver, my price target is probably over $21, probably by the end of this year. And these are the prices that I'm looking for these three asset classes. But next year is going to be, I think, going to be a fantastic year for these three asset classes, because I think next year is going to be the year the recession really starts to get underway, even with the central banks trying to prevent it from happening. They're just going to have to do more and more stimulus to try to offset this recession, and the recession's going to start to happen anyway. And this is going to feed into a cycle of even more stimulus to try to avert a crash, you know? And the more stimulus they give, the more the markets get dependent upon this stimulus, and if they try to withdraw it, there's going to be a crash. And so we're in a really bizarro land in the financial system right now. Let's take a look at the Dow Jones today. You know, the Dow Jones is up. Well, yeah, of course it's going to be up 67 points to 27,259. Of course it's going to be up, because the central banks have now went into print mode. European Central Bank, the Bank of China, you know, this is going to be positive to the market. And the market has also got hopes that the Federal Reserve is going to follow suit, which they probably will, you know. And so there's no end to how high the market can go priced in dollars, especially if the dollar's going into a hyperinflation. Take a look at other markets and exchanges where countries have experienced hyperinflation, and you can see there's no end to how high the market can go priced in a currency that's becoming worthless. I mean, 1 billion times 0 is still 0. So if your market goes up to 100,000, 200,000, 500,000, you know, it doesn't matter if the currency's worth nothing. You know, I mean, it's just numbers, guys. Let's take a look now at crude oil prices. Haven't went much of anywhere today. They suffered a drop, and today they're kind of a little bit of an upward trend. We're up 15 cents, but it's really not much. It's still down from where it was a few days ago. It's down 0.27% on the day so far. U.S. Treasuries today. We see rising yields. I think that it's possible that this snapback that I've been talking about in Treasury, snapping back, in other words, yields rising suddenly and unexpectedly, I've been watching for that it actually could happen. I'm not sure that we're in it yet, but I'm going to tell you what, I'm keeping my eye on that 10-year. I've set a price of 3.25%, and the market's going to start to roll over if that happens. And right now, today, we're at 1.826%. We're up 3.5 basis points on the day. I wouldn't call that a big rise in the yields, 3.3, because we've seen some awful big movements in this market right here in the Treasury market. Movements to the downside. Like we've seen days where 7 basis points, 8 basis points, 9 basis points. So today we're getting a 3 basis point move to the upside. I'm going to keep my eye on treasuries because we've had this yield curve inversion for a while, and that's a sure sign the recession's coming. Let's move on to the U.S. dollar index today. 98.2 on the U.S. dollar index. And the dollar's been going sideways for a while now. It's been hovering in between. Well, let's take a look. Let's go into the 3-year here and see if they'll bring up a chart. So there's 3 years. You know, and if we take a look here at the end of this, the last year or so, look, going all the way back to 8th 12th 2018, it was 96.10. You know, we are seeing a very slight rise in the dollar. It's very slow, though. It's awfully slow. But it is slowly rising, going back to, see, when did it start slowly rising? Back around January 2018 until now. It's been very slowly rising. But it's awful slow. It's so slow, it's like watching paint dry, you know? Listen, thank you guys for listening to this report. Give me a thumbs up, and we'll catch you guys in the very next show. I'm probably going to do a nice show this weekend. I'm going to be out there scouring the news, looking for subject matter for my show for this weekend. And this afternoon, I think I might run down. We got a huge aircraft carrier right in Halifax Harbor. I'd love to see it. You know, it's a British aircraft carrier, and I'd love to see it. It's going to be big and majestic, and I think I'm going to run down and take a look at it and take a little film footage of it, you know, and post it on my other channel over there at Glenn Travels America channel. You know, it's and we'll catch you guys later. Bye bye.